I'm Sarah Borkson-Keto here in New York for NAREIT's REIT Week 2018 Investor Conference. Today I'm joined by Bill Blackham, President and CEO of Condor Hospitality Properties Trust. Welcome, Bill.
Thank you.
So, Bill, can you bring us up to date on the transformation in the Condor portfolio and what are your priorities right now?
Well, a lot has taken place over the last 36 months, and specifically over the last 12 months. We have gone through a process of selling some 55 legacy assets. Today, there are only 2 hotels remaining from the portfolio that existed 36 months ago. We've generated in the vicinity of $160 or $170 million of sales proceeds, which have then been redeployed into our new investment strategy, which is buying newer premium branded upper mid-scale and upscale hotels in secondary markets, MSAs that are ranked between 20 and 100 in the United States. And have successfully acquired approximately 15 hotels during this period of time. What's unique in our results in the past 12 months is that we have enjoyed the benefit with this new investment portfolio of outperforming the industry in terms of our RevPAR growth, as well as having margin expansion as opposed to contraction. And so it would appear that the investment strategy is appropriate and working very nicely at this point in the cycle.
And you mentioned RevPAR growth. What were some of the factors behind the growth in the first quarter?
In the first quarter, interestingly enough, we reported a 3.9% RevPAR growth compared to an industry which was in the low threes and our peer group being even lower. In our case, it's because the secondary markets that we're located in have less supply in relationship to demand increases, so the fundamentals are stronger. We have newer hotels. The average age of our hotels is 4 years old, and so with that, the design and the guest experience that's being offered is more consistent with what the customer is seeking today, and so we're able to get some premium pricing. Additionally, because the assets are newer, they're still stabilizing, and so we're in a position where the initial customer base that was brought in at lower rates in order to create stabilization in the asset is now being moved along into higher rated business, and some of it was tied to OTAs, the online travel agencies generated, and we're displacing some of that. And so we're expanding not only the rate that we're charging, but also the profitability. So in our 3.9% RevPAR growth, approximately 3.5% of it was rate increase, and yet we still increased occupancy in the portfolio almost a half a point. So what's really encouraging about it is that we had 1 hotel under complete renovation during this period of time, and on a pro forma basis, if we eliminate the Leawood Aloft Hotel, our actual remaining portfolio had a 5.6% RevPAR growth.
And given current valuation levels, what are some of the challenges Condor is facing in growing the enterprise?
Well, I think there are several. First of all, we are still a small company. We are a micro-cap company. Our market capitalization is in the range of $125 million. And so therefore, cost of capital becomes an issue. While our investment yields are very attractive, we still have to obviously use capital to deploy in order to make investments. And so having access to capital, which is appropriately priced, is obviously a challenge and very important. Now, this year, REIT stocks in the hospitality space have not necessarily been favored. There's been some sector outflow, and there have been concerns relative to the economy and to hospitality in particular, although in the last 4 to 6 weeks that's been changing. We've been somewhat isolated from that because our stock is not tracked or linked to many of the ETFs, and so therefore our year-to-date stock performance is actually better than our peer group. But that doesn't mean that we don't have a challenge with respect to capital. We also have to continue to find acquisitions that are consistent with what we've accomplished. And clearly, one of the challenges we will face, because our approach has been successful, is I'm sure people will start to emulate our investment strategy because it's working and outperforming performing. So that will be a challenge. I think generally speaking across the industry, and frankly across most industries, the issue of labor is going to be a real challenge moving forward, both the price of it and the availability of it. And so those are, just at first reaction to your question, challenges that will be ongoing this year.
Great. Well, thank you very much, Bill, for joining us.
My pleasure. Thank you for having us.
And for more from REIT Week 2018, be sure to visit REIT.com.